Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 30th, 2023. It's 1:32 p.m. Eastern Time as I'm starting the video, and what we're going to cover in this one are gold, silver, the gold mining stocks via GDX. We'll look at a few individual miners. We'll look at the silver miners, and of course, I always say that, in my opinion, analysis on gold and silver is incomplete without proper analysis on the dollar and or the euro, because gold tends to move, has a very strong historical inverse correlation to the US dollar. Dollar goes up, gold goes down, vice versa. And again, not day to day, but the bigger trends holds true. You can look at any long-term chart, compare the two, go back as many years as you want, and you'll see that. So there's always periods of a disconnect, and like I say, those are periods where there's either overwhelming demand or supply for gold, meaning buying pressure, selling pressure, that might offset that relationship. But the relationship is somewhat immutable because it's simply the fact that gold is priced in US dollars. So, all other things being held equal, meaning supply and demand, rising dollar means it takes fewer dollars to buy an ounce of gold, and a falling dollar means it takes more dollars to buy 1 ounce of gold. That's why that works that way. Okay. And what I'm going to do, so you know the order if you want to skip ahead or anything, I'll start with the metals. We'll look at gold, silver, we'll look at the futures, we'll look at the ETFs. Then I'll also we'll do the miners next. I'll try to keep it in that order, and then end with the currencies. So let's dive in here. This is GLD. I know this is a very, very busy chart. Let me see if I have a clean board. I don't think I do. I'll just go off this one and tell you. Anyways, this is gold. This is the bull market. It goes to the left of this chart. Really bottom back in December of 15. It's been in a bull market. This high right here was the previous bull market high from, I think it was 2011, if I'm not mistaken, way back then. And then we double tested it here. It was and continues to be my view that gold's in an ongoing bull market. It probably has more upside to come. And this has just been high level consolidation. I identify these ranges, and you had two pops above that range. Both times it sent it to the bottom of the range. You had this back here, which was at the time I suspected, and then it was confirmed afterwards that would be a false breakdown, aka bear trap. That has been for years, even way back here, a big level to me, 158, and it was a buy zone, where I exited all long-term positions here from the bull market, put on some shorts and said you can buy in that zone. It's so convoluted here. Again, I know this chart's busy. I'm just boxing in. The buy zone was right here. There's a little box there if you can see it. And so we had multiple buying opportunities in or at that, the top, bottom, to the middle of the zone. And then when we broke down here, it was because of the fact many factors, including but not limited to the outlook in the dollar and the euro, positive, aka bullish divergences when we had that breakdown here, clear, strong bullish divergences on gold, and the fact, as I mentioned, that somehow I have my suspicions why, that gold and silver never got the memo that commodities were in a rip-roaring bull market, and you saw copper and palladium and platinum and aluminum, all kinds of industrial metals going up in the inflation bid, and so there was relative value for that in gold, and then finally got the memo, and also the flight to safety thing. And my theory was that it was crypto, the great Bitcoin bubble, that the Bitcoin fans said, Bitcoin's the new gold. It's a alternative to the U.S. dollar, alternative to the fiat money system. It's alternative to gold, and obviously Bitcoin blew up. So people started realizing, the old tried and true flight to safety for the last several thousand years is still around, and hey, that's what I'll buy. So whether that's right or wrong, that doesn't matter. The chart said when we recovered here, moved back above 158, that was a powerful bear trap. Bear trap. So the shorts were squeezed out, bulls came in, and it's a strong technical event. And now I've been watching and where I'm going with this is today. And preemptively, I've started a position. I put a very tight stop on the very last of my silver miners, and I've closed out most of these miners a little early here, waiting for a pullback, but now I'm actually short. Now we had a little whipsaw signal I'll get to in a minute in silver, threw out there the other day, and then that proved to be a whipsaw. But this is the trend line to watch. Keep it very simple. We've got a nice clean up trend line in gold. That's GLD off the November lows. We have negative divergence here on the PPO, a pending and likely any more downside cross on the PPO right there. And you can see the last time, typically you want clean. There's some separation in here. You have to zoom in a little bit. Here it was flattened out. You stay away from trying to extract any useful information or predictive value from a PPO or MACD when you're trading in a sideways range, because the lines flatten out. You want clear separation. That's clear separation right there. And we just actually made the bearish PPO crossover. Last one we had before that was right here, and there was still some more downside to go. Then you had one right here, and you had all that downside there. You had one here, but you kind of flattened out, but it was across, and then it started moving lower about there. So you crossed over, you went sideways, and then the next leg down. There was a crossover there. So you can see pretty good stuff. Again, just showing you, just like I made the case in the stock market today, I am the prosecution here, and I'm building a case. You gotta have a damn strong case if you're trying to short something in a bull market. Okay, that's what I'll say. In a bear market, you get bailed out. And gold is in by all the long-term metrics. Again, go back to the weekly chart. This is a bull market, as I said, a bottom in 2015, and we're at near all-time highs. And that's going to be powerful, powerful stuff if and when we break out of those. That was the 2011 all-time high I mentioned back then. Came up, tested it twice, got rejected, been consolidating. Should we make a clear and definitive breakout to the upside, that's going to be very bullish. Now, we can go the other way, but we're quite a ways away from 158. So just again, to go back to what I'm looking at, and I think is the most likely scenario, is a correction here. It's going to take us back. I'm going to speak at the end of this video on currencies. I didn't make mention. I've been hyper focused, or talking a lot, I should say, about the big fangs coming up: Apple, Amazon, and Alphabet on Thursday after the close, those earnings reports. But let's not forget, we have the Fed meeting on Wednesday. Expectation is for a 25 basis point rate hike, followed by the ECB expectation of a 50-point hike, followed by, and that's on Thursday morning, and then after that comes the Bank of England, and they're also expected to hike. So a lot of movement in currencies. Why did I say that? This week is to gold and Forex and the currencies, and silver and the miners, is exactly what it is to the stock market with those big market leading Apple, Alphabet, and Amazon reporting. Same thing. So you have a huge week here. And gold and the stock market don't have a direct correlation, but because you have all the big three central banks meeting today, you're certainly going to see some, or you have the potential to see some big moves in the currencies and therefore in the metals. And based on everything I'm seeing here, the odds say we're gonna break down and have a tradable swing trade. So two takeaways. That's what I did. I actually moved up the remaining silver positions that I have, moved up tight stops just in case I'm wrong and goes the other way and the metals explode and hold these trend line supports. So that's it. Let's just focus on the technicals. So I'll give you levels to watch. The safe bet is to wait for the solid sell signals. I'm only taking a starter so far in a GDX short, and I plan to add to that should the evidence confirm the entry. And that would be, first of all, break on that trend line in GLD. There's gold. Let me show you futures. That's a daily chart for you futures traders. And even if you don't trade futures, I always say watch the charts of the futures because that could give you some additional insight. When you look at GLD, you're seeing gold trading from 9:30 p.m. Eastern time in the US to 4 p.m. Gold trades around the world. And it trades in every country 24 hours a day. Not necessarily, the futures trade virtually around the clock. And there's a 60-minute chart. I've got to move that away for you. I have a little line there. I want to set an alert. Since this charting platform doesn't allow for trend line alerts, I have a price alert set just below that. You can see it's kind of consolidating. There's a little support there. And this is the big thing. I'm on a 6-month chart. 2-hour candles in the futures of GC gold futures. There's the trend line. So when that trend line breaks, in fact, right about where I moved that alert line, let me put it back to where I had it. That's just from my own reference. So if I'm not paying attention, if I'm looking at something else at the time, or gold breaks down in the middle of the night, I wake up and I see my alert when I get up. All right, so let me just put it right below that recent low and give you a, you want to keep it simple now. I didn't really mark this chart up for targets, but I'll tell you probably right about there would be a minimum target, give or take. Let me move it down just so I like it right here. Feels good. Somewhere around there, about 1850 in gold. That's gonna, if I'm right, that's gonna give us a drop, an initial. That's an initial and minimum target. Well, I shouldn't say minimum, but an initial target, preferred target, 4.5%. I have a smaller target there. Remember, gold moves up and down a lot less than silver. If you get the call on gold right, silver is usually going to go down quite a bit more, or up quite a bit more if it's a bull run. And so there's your first target, 1887, then 1850. Silver, let me give you that. SI, let's start with the futures. Give me 1 second, I'll cue that chart up here. I've got it down below. Where did you go? Here you are. All right. So here's that whipsaw I was talking about. I laid out a setup. I've been watching this level. Silver's been consolidating in this right here, big old trading range for gosh, over a month now. This goes back to early mid-December here. Really, you're in that trading range there. And I laid a, gave it a short setup, but I was very careful to say, not a full all in, because you could see a whipsaw. Because gold, I said, because gold hasn't broken down and needs to break down. And so I said, maybe take a starter position, but don't add to it unless you get a confirmation. All that was is a whipsaw. We snapped right back immediately back up in there, but that's still an important level in my opinion. And so, easy takeaway. You can see I have an alert set there. And remember, gold I keep referring to as the big brother of silver. So if gold breaks down, you can bet your bottom dollar silver is going to follow, whether silver breaks down first or follows. I don't have targets for you here on this one, but I'm going to give you, most of you I believe trade the metals and the miners, so let's go there. The ETF I already covered, GLD. There's SLV. You can see the same thing, just like silver. Let me jump back there. There's one thing I didn't show you. Okay, you had that trend line. Let me go back a little farther. Let me go to 6 months here. See, this is what happened in silver. It had an uptrend line comparable to gold's, but gold didn't break down. So silver broke down, but hey, where's it going to? It's not going to go too far. It's waiting for gold. And when gold breaks down, silver breaks down. These are the same targets I believe I gave you before, 22.36, and then 21.15, give or take. Of course, follow gold's lead. What does that mean? Well, if gold at the time, let's say I'm right on this, and silver's coming down here, heading on down pretty quick to 21.15, but then right here, a little above it, gold hits support, the buyers step in, then that's where silver may reverse. But either way, these are the targets. Just try to watch them and trade them both together. All right, back to gold. I already covered there. Silver. Oh yeah, let me give you the ETF. SLV, same thing as the futures I showed you. You had a uptrend line, pretty clean, right? You had negative divergence that says you're likely to fail there. There's your, especially recently, it started getting steeper right here at this point. You broke down, but again, it's not going to go too far without gold, so it's been kind of in a holding pattern, waiting to see which way gold goes, and you also have a primary downtrend off the highs. I know I have a lot of lines on this chart, and for that I apologize. It's quite busy, but again, that's why I use these drawing tools to kind of highlight the salient points there. So there was that little whipsaw. So if you're trading SLV, 2060 first target support. If it gets ugly, next target would be, I'm going to turn that number on, about 1982, give or take. And then 911 max target, and that would be a great re-entry if we get that deep of a correction, about $19, 1911. And that would be, should it come and get that far, that's about a 12.5% pullback in silver. Miners, GDX, gotta love this one. All right, so the last time I did an update for you, a video, check the tag thing on the site, unless I missed one, forgot to tag it, would have been all the way back here in November, mid-November, so not too long, a couple months ago, and we were roaring on up here. I first threw out GDX as a trade idea here listing 1, 2, 3, 4 targets, and as I covered in this video, you can reference that on the site, November 14th. We went on, extended, simply we had divergent low right here, but we went on to make a marginal new, but still divergent and even larger divergent low, bigger positive divergences. Then went on to break out above the primary trend line, hit that resistance, pulled back, back tested the trend line, ran up, and as I covered in the video at the time, we were heading up to T1. First target with T2, T3 zone, meaning between these two levels here, and T4. So that was then. This is now. We have come full circle. We went up. We did hit T1. We had a pullback right there, a little correction. We walked our way up, and we've been walking up. Let me just highlight it for you within this nice bearish rising wedge. Right there, right, stop cold at the bottom. That's that same T3 zone. That was really good resistance there, as was that. That's why I listed it as a zone. We hit the bottom of the zone recently, and we're just above it. So that's one reason I took the short today in anticipation of the breakdown. I usually say Trading 101 or it says don't short a pullback to support. You want to buy support or wait for a breakdown of it. But however, I just now saw the word, and it's still in very close proximity to that resistance. If there's a little spike up in the with the whatever the central banks do this week, and remember, Fed's going to come first Wednesday, 2 p.m. Then the ECB, and then the banking. The ECB is a bigger one. No offense to you Brits, but it's the simple weighting. The euro has like a 56 point something percent, or no, is it? Yeah, 56 point something. By far the largest component of the U.S. dollar index. So, and the yen is the second most at 23 point something. So the pound doesn't really impact, pound sterling doesn't impact the dollar index as much nearly as the euro. So that's why I'm really watching what the ECB does. And again, I gave you the expectations, and it doesn't matter whether the rates come in higher or lower than the expectations. It's about what they say, what Powell says Wednesday afternoon, and then what the ECB says on Thursday, but it's also more than that. It's about how the market reacts. So I'm going to get to those charts in a second. All I can tell you with confidence is this is a bearish rising wedge. It's nice and clean. You're extended. I don't know where my divergence lines went. They were here, and now they're there again. Negative divergence, just like you had at this low. Positive divergence gave us that. See the negative divergences here? Gave us that. Positive divergences right here gave us that. This is swing trading, folks. It's not always 100% effective, or but this is the big stuff. And sometimes you get little false breakdowns and you go a little higher, but you just stick with it. If and when they take out these divergences, then that might change things. But like I said, they can certainly pop it up. It's still at support, and if they want to take it up here next week, and the miners bounce after the whatever happens this week, another 6%, I'd be adding to the short right there at the top of the T3 zone, 34.17, and I might even, that's only 13%. I'll do a 2-to-1. No, that's a 1-to-1. I don't like it that much. Yeah, I would set stops above that 34.17, not far above it. It's too far. Because a max pullback, what I'd love to see, I don't think we'll pull back any deeper than my guess is right now. Let's see what happens. First of all, we might not even get a pullback. That 29, that former T1, that's good support. I had it at 20. It looks like 28.93. Really good support. Support, and then it broke. And when it broke, it was lights out for the miners, right? We went down, came back up, struggled with it a little bit, and then popped it. So that would be a natural re-entry point there in an area to cover swing shorts in GDX. All right, SIL are your silver miner ETFs. Stated in recent videos over the last few months, really like the miners, the silver miners. They tend to outperform the gold miners. Same thing, beautiful bearish rising wedge. There's resistance right here at 31.82. It was back here. It was major support. Big reaction high right there. Negative divergence, bearish rising wedge. All you need to throw in is a breakdown to light the match, and that should be the catalyst for a move down to, I'm going to move this line right here, light that up, and give you, just right now, a single target. I may add additional ones. 27.37 right there is where I think the miners go back to, and that would be a great area if they do to cover SIL, the Silver Miners ETF, recycle back in for a long, depending on how the charts look at the time, of course. You want to see something, you know, but as of now, that's kind of where I think we might go. All right, and that just leaves the currencies. USDOLR, dollar index. If you recall, recently I was highlighting this uptrend line where I said we good chance we'd get a bounce, and if we didn't, right here, there's your primary uptrend line. That I said we have support, really pretty good support, pretty solid. Just below it at 12,628, and I could see the possibility we go down there and then put in a divergent low, and that's exactly what we've done now. We put in that divergent low, see the indicators making higher highs, positive divergence, and we also have this little wedge type pattern here. So the dollar looks poised to rally off this support and break out. If it doesn't, then guess what? The gold short probably won't pan out. Remember, a falling dollar, which we've been in, is bullish for gold. So that, no coincidence, this coincides with the recent leg up in gold and silver, right? And gold and silver were under pressure when the dollar was moving up. All right, let's not overthink it. EUR, USD, Euro 57.6% is the weighting. So by far the largest component. That's why everything else really doesn't matter much. Yen a little bit, and I'll get to there. There's some contradictory outlook between the yen and the euro, but as far as the dollar index, but there's the uptrend line, little wedge. What I can tell you definitively is there's nice negative divergence just on the euro. This is the euro US dollar pair, which is effectively the euro, with the negative divergences and that uptrend line. And so I've been talking about this for weeks now. Once we get a break and a pullback, I expect we'll come back in to back test this uptrend line right here, as well as this downtrend line which it broke out of. So I remain longer term bullish on the euro, bearish on the dollar, which is also longer term bullish on gold and silver. Nothing's changed. I'm just looking now to most likely game a pullback, maybe profit on the short side, recycle back in long when the time is right into the metals and miners. And let me show you the yen, JPY, USD, the yen dollar index. So this one shows you when this goes up, the dollar is going up against the yen, but the yen's a 13.6, the second largest, but again, it's a fraction. It's less than a third of the weighting that the euro has on the dollar index. So, but it can it can move the needle a little bit. More so than any other currency besides the euro. And there it is. There's the uptrend line right there. So this is what would probably see maybe a little more downside, and ultimately a breakout. This is setting up for a rally. So the dollar is setting up for a rally against the yen, which means the yen's setting up for a drop. It's most likely the case here. But anyway, that's my outlook on the yen there. And now let me just go through a few individual miners. Let me start with the silver miners. Time permitting, I'll get into the gold miners. Go to SIL. I need to queue up one of these and get to my short list on that's the juniors, silver juniors, SIL. Go to WPM. Let's see. I've got a watch list here. I'm trying to queue up for you. One sec. Okay, this is my short list. I have a long list of silver miners and a short one. This is the one I believe I've covered in most of the recent videos and laid these out as some of my top picks. PAAS, Pan American Silver. That one, you had a nice clean downtrend line with positive divergence. That forms a bullish falling wedge pattern right there. And it coincided with, bullish setup in silver and gold. Broke out. We immediately hit my first target. Went on, just hit my second target. And you have an uptrend line. So my guess is probably, we'll either get that one little last thrust up, which would be two things. It would be an objective level to book profits on a long position in PAS if you took it, and or to turn around and short it. Now I will say this. The bull market, these silver miners when they want to run, they can really run. You got to be careful. It's kind of like natural gas, man. When they want to run, they can go, and just when you think they can't go anymore, they keep going. So just be careful on the short side. A little more apt. I'll take the ETFs, but a little more apt at this point in time. Unless I can make a screaming case to short it, I would rather just take profits which is what I've already done. But then if it pops up here, maybe a short for a fade trade, especially if it breaks the trend line. Now, where I'd like to buy it back, it would be 1726, and or cover a short if I happen to take it short. Just above the 1726, which was the former first target. Next one up, AG, First Majestic Silver. Let's see if I have any annotations on that chart. Yep, sure do. Bullish falling wedge, beautiful bullish falling wedge. Breakout right there. T1 hit right here, T2 hit there. It already took out its trend line. It's been working its way lower. Maybe a little more downside if the sector corrects somewhere in here. And ultimately, these are the next targets. T3, which is 1094, called about $11, plus the downtrend line. Those should come in together. T4, 1276. T5, 1463. Remember, these were targets that I created for you last year, all the way back in August. They are still near-term, intermediate-term swing or trend targets, really. This one's working its way up. MAG, Mag Silver, T1R1 hit right there off the divergent low, broke above T1. Remember, R1 means first resistance. Resistance once broken, which it was right here, becomes support. Popped up, you're falling back to that support, whereas normally I might say buy it, you're close enough. Based on everything I've just covered, I think there's going to be a pullback. This one could come in a little bit more, so I don't really have a good level. Maybe we don't have it yet, but maybe this one will form an uptrend line here off the lows. That'd be a pretty healthy correction, but you'd have to have a reaction off that line to validate it. But you can see, like everything else, a lot of these guys just put in these divergent highs, negative divergence. T3 was the trend line, so that one was hit. And that was my final target on that one, so that would have been a reason to get out. FSM, Fortuna, Silver Mines, divergent low, T1, R1 hit, T2 hit, T3 was the trend line, so remember that was, put it back there, hit, T4 hit, T5 just hit. So yeah, I have additional targets, but we're getting this rally's getting long in the tooth. I mean, this stock has rallied since September. It's rallied 101%. Like I said, these silver miners can run. They have the juice. If you're gonna, usually when I'm bullish on gold and silver, I'm going to trade the silver miners over the gold miners, or I'm going to trade the miners in general, even GDX and the gold mining stocks, over gold and silver, because you get more bang for your buck, unless I'm trading futures. I have my primary trading account. I'll trade futures for tax purposes and in the round-the-clock liquidity, more active trading. And then in longer-term accounts, IRAs and the likes, I'll use these guys here. And there's it. It's divergent high, negative divergence. And I put a high probability on these short pullback trades, and enough, like I said, for me to establish positions to get out of the remaining positions I have now with tight stops that will probably be taken out today or tomorrow if they haven't been already. And then once the central banks are out of the way, that should give me, unless something changes in the charts, that should give me an all clear to take it up to a more aggressive position. So again, just looking right now for a pullback in an ongoing bull market, correction back to any of these levels here. We'll see. I'll follow, of course. When gold and silver hit support, that's probably more important than these individual miners, because when gold and silver finally reverse, when they reverse. So again, I'm making a lot of assumptions here. I'm playing 3 steps ahead of the game. We haven't even reversed yet. So I'm calling for a correction, and I'm calling for, if and when that correction happens, where the reversal comes from. And that's the point. You want to start scaling back into these miners for the next leg up for these additional targets I laid out last year, late last year. T1, we just hit it on EXK. There's an uptrend line we're dancing, flirting with right now. If that breaks, may come in, maybe want to backtest this trend line. But again, ultimately, and I'm going to give you one level here. Maybe there's some pretty good support right around here, about $3. So, but it doesn't look like much. But from $3.50 where it's at right now, if it drops to $3, that's going to be about a 13% drop. So if you're in it, yeah, I still have a pretty high degree of confidence these additional targets will be hit. But do you want to give back 13% in profits? That's up to you. But T4 is still, at this point in time, my final near-term trend / swing target. T1 was already hit, downtrend line and price resistance there. SVM, uptrend line right there, still above it. Hit T1, T2, plenty of upside to go. Again, ideally, correction. Maybe we don't get it. Maybe if we don't get a correction, then this is your next target and likely reaction. Then T4, even better. I really like that T4 as a longer term swing target. And ultimately, all the way up here. I wouldn't put multiple targets if I didn't think they all had a chance to get hit. ASM, T1 was hit here, the downtrend line in 75. Almost a T2, but again, if the metals roll over here soon, this one will probably come back at least to check that trend line right there. This is a low price one. Be careful with that. But that's it. And then GDX, I'll just go over some of the big miners. I know a lot of folks like to trade the gold mining stocks. Newmont's one of the biggest in the sector, and had just a nice downtrend line. Broke out, and then you had that one last washout move. I commented at the time, it looked to me like the powers that be tried to run out and to shake out the weak hands and the longs and pull in some shorts, and that's exactly what proved to be the case. There was a comment I made to somebody's comment on the site under one of the things, and saw some of these just had a big one-day swoon down and then boom, but the charts remain constructive. That typically doesn't shake me out, only wants me to add more when I see washout moves like that. And I wasn't actively watching them then. There was somebody pointing out on the site, but then I commented, and sure enough, look at they bought that up hard and haven't looked back. So that's the the nefarious nature of the markets. So take shares from no offense, weak hands, and then turn them over into the the pros, load up, and that one rallied from that point. Whoever got shaken out missed out on a 59% run right up into that target I had there, 59.53, but it's right at the downtrend line or uptrend line right now. Pretty overbought. When you start seeing divergences or these overbought readings, that's when these guys are usually due for a pullback, and there's a nice support level right there if you're looking to buy this one back around there. And if things get ugly, which I could see, that would be my max target right there, 45.14, and that would take this one down. Newmont would drop about 14%, and that's going to have an impact. This is one of the largest components of GDX, so certainly have an impact. Barrick Gold, that was the one I think it was commented on that I made the reply to. It looked like a false, not a false, just a engineered move by the powers that be. Took it down, but put in a big old divergent low and then ramped it right back up, coming up to that 2040 target / resistance level. Not sure if it's going to get there, but if it does, that would coincide with an initial reaction that's bearish on the dollar and spikes gold and silver up, and then that could give you an exit point if you're in this one, or a short entry there at 2040, and there's your all clear on a break of the trend line, and there's your I would actually buyback target or support zone would be between that 1725 and down to here at about 1684. AEM, again, I can go through this. Birds of a feather flock together, especially in the gold mining sector. So you're going to see many of the almost identical looking charts. You had divergent lows here, which were the reason to scale in or be long, and then breakouts above these basing patterns, and then a strong rally, but into resistance. That's the common theme here. That's why I go over all these charts again. Most of these stocks have rallied into or very near price targets, which are and/or resistance levels, with clean uptrend lines, negative divergences, overbought conditions. Well, all right, that's it. WPM, wheat and precious metals. RGLD, Royal Gold, I'm not going to, same thing. These wedges across the board, trend lines, resistance levels right there, resistance zone on KGC. Probably, they already had a trend line there. Don't even need to draw a new one. Let me delete that one, and let's see what happens when I simply extend this one. Edit, extend right. Look at that. Can't make this stuff up. The technical analysis, it just so often works out that way. That was an old trend line there, and you just bring it across, and you ran into major downtrend line resistance. So, all right, I can sit here and say the same thing over. There's another dozen and a half, 2 dozen stocks in GDX. I'm going to show you the same thing on each and every one, just about rallied into resistance, overbought, negative divergences. It's my shorting up right now, or short trade idea. So consider it an active trade. I think it's enough to short GDX. If you don't short or you can't short, Nugget is a no, dust. Dust is the opposite of nugget. So for IRA type account or non-margin accounts, it has leverage, two-time leverage. So of course you have the silver miners ETFs. You can short those directly, or the individual miners. You get more bang for your buck if you have the time and inclination to put together a portfolio of at least half dozen, if not a dozen or so, of the most bearish names that I just went over, the ones you find. You'll most likely outperform. But then again, that's the flip side to it. That's the whole benefit of ETFs, is the diversification. So if you go to GDX, for example, you own about, I don't know, 30 or something gold mining stocks. And so if one of those really craps out or does, let's say you're short the sector and one of them just happens to go up against the herd, that's the benefit. It's safety in numbers, just like trading SPY, the S&P 500 ETF versus trading individual stocks. But it cuts the other way. It's going to, while it reduces your risk by diversification, it also dilutes your returns, because you're holding a whole basket there. All right, I'm going to wrap it up here, and I will follow up. There's going to be movement in the Forex markets this week. There's going to be movement in the equity markets this week, and quite possibly a lot. And as I always say, the charts are dynamic, and so is my analysis. Nothing will change, even if these miners spike after the Fed meeting or even after the ECB. They'd have to spike a lot from where they're at to negate the bearish setups that I'm seeing. So at this point in time, my plan would be to add on any rallies into resistance above these levels, and or add on weakness, such as a breakdown of the bearish rising wedge, or support, on this. And I'll look at all the miners as well, and I'll look at silver futures, gold futures, and kind of take it all in collectively. Like I said, the more evidence you have to be long or short of security, the better chance you have of that trade playing out. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.